Hey there, Mitch Hancock. Today we're going to be talking about what I feel like is the most important thing that I help any of my clients with. It's something that if you have it, it can really impact your life in a positive way, especially when you know how to utilize this financial vehicle correctly. And then if you don't have it, it can really cause serious issues for you and your family should anything catastrophic happen. What we're going to be going into today is the details of life insurance. Now I know that this isn't always everyone's favorite conversation to have because it's not always really fun to think about the morbidity of what happens if I pass away and stuff like that, but it's an important conversation to have. So the things we're going to be covering is first and foremost, how much life insurance should you have? And I know that that's a huge debate in the financial services community. I've talked to people on both ends of the spectrum who they feel like they've got it dialed into the exact amount to where they can do a cookie cutter approach of saying everyone should have at least X amount of life insurance. And then I've talked to people at the other end of the spectrum to where they say there's no way that you can possibly know how much life insurance somebody needs. And so we're going to bridge that gap. We are going to demystify it, help it make sense. And then in some of the subsequent videos, we're going to be going into talking about the details of how you can really make this financial product work out for you. So the first thing with life insurance that we want to make sure that we cover is this. So if you can't read my handwriting here, that says final expense. So final expenses, excuse me. So this is the first thing that the first base that we want to make sure that we have covered. We're going to go over 3 other bases that we need to make sure that we've got squared away and covered. But if nothing else, if all you can afford is a basic life insurance policy, it needs to cover this. So let's talk a little bit about average funeral costs. On the low end, an average funeral is going to cost between $5,000 to $7,000 for paying for the final expenses of medical bills and to just do a basic funeral or even a cremation. When we start to scale that up, a lot of funerals end up costing in the $15,000 to $20,000 range, and I've talked to a lot of people who it ends up shaking out to be more like $30,000 or $40,000. So based off of what you feel like is appropriate, I'm gonna sneeze. Nope, maybe not. Excuse me. Based off of what you think is appropriate, these final expenses need to be covered. That's the bare bones minimum that we want to make sure that we have enough life insurance to cover. And while we're on this topic, you've probably seen memes floating around of that GoFundMe is not life insurance. Now, I don't want to be the Debbie Downer of GoFundMe because I think it's a wonderful platform. I think that it's fantastic to see a community come together to support other people. But in reality, if you don't have a life insurance policy, I don't care who you are, I don't care where you come from, if you don't have a life insurance policy, plain and simple, you're passing the buck on to somebody else. That's just how it works. And even if you've got money in the bank, let's say that you've got 50 grand sitting in the bank, and so if something happened to you, you said, you know what, my spouse or my loved ones, they can just get this $50,000. Let's talk a little bit about efficiency here. So if I can buy, we'll jump ahead and talk a little bit about our fourth topic. I talk to older folks all the time who they want to leave some funds to their kids to inherit. They say, hey, we've got $50,000 that we want to leave to our kids. And I say, great, would you like to double that? And they're like, what do you mean? Is this like some sort of investment thing? I just simply say, no, we're going to put that into a life insurance contract and we can double the amount typically and then provide that amount tax-free. Because that's one of the other things that people don't think about is that oftentimes if you're going to pass wealth from one generation to another, you may end up causing a negative tax consequence for that person. But let's go back to the scenario of if you're a husband and you got 50 grand sitting in the account, and in the event that you pass away, you're like, oh, my wife will just have that $50,000. Do you want to know how much life insurance you could buy with 50 grand? You can definitely more than double it. When you're probably in your earning years, when you're young and healthy, you can buy literally, I just did a policy for a gentleman who he was of average health. He got $1 million life insurance policy, 28, 29, somewhere in there, got $1 million life insurance policy for about $80 a month. And that included some additional riders and things like that made the policy better. And so don't be cheap about it. That's plain and simple. The best thing that I can say is that if you think, oh, I don't need life insurance, I don't want to pay the cost of life insurance, I can tell you what, an insurance contract can make your money a heck of a lot more efficient than just leaving it in cash and passing that along to somebody. I hope that makes sense. So this is the first thing that we want to do, is cover final expenses. Let's move on to number 2. Number 2 is going to be this. Number 2 is going to be to replace income. So again, going back to the scenario, let's say that you're the primary breadwinner for your family, and you make $50,000 a year. If you were to pass away, not only is that going to be a terrible experience and just a devastating blow emotionally, mentally, for your family, but it's also going to have a huge financial impact on your family, because they're going to have lost income. It's mom's going to have to go to work, or whatever the family situation may be. But replacement of income, and this is not really one that you may want to, I mean, I guess you can. A lot of people say you need to have 10 times your annual income, and that's probably a good rule of thumb. But what I did personally when I was setting up my life insurance contracts is that my wife and I, we sat down and said, well, what's our objective? What's our goal? If something happens to Mitch, we want to make sure that my wife doesn't have to work. We've got young kids. We want to make sure that my wife doesn't have to work. I mean, if she wants to, certainly, but we don't want to have it so that she is burdened and that she absolutely, for financial necessity, has to go to work for at least 20 years. So we planned out for income replacement for our family for 20 years, and then we also planned out education funding for our kids, and being able to pay off debts and stuff like that, just to keep expenses lower in that type of a situation. So replacement of income is going to be our secondary priority after we take care of final expenses. So that's number 2. Number 3 is one area where I get really excited about, and a lot of people are totally unaware that you can even do this, and it's probably the best kept secret in the financial services industry, and that is this. I wrote that one a little bit smaller, so if you can't read that, that says tax-free growth. That a lot of people are unaware that with a life insurance contract, when it's structured correctly, your money can come and pass to your heirs tax-free, and maybe that's something that you're familiar with, but what a lot of people don't realize is that you can actually utilize a life insurance contract as a savings vehicle. You can utilize a life insurance contract in conjunction with your investments, or as an investment in and of itself, depending on how you want to structure it. And if that contract is structured correctly, it can be tax-free. Very similar to like a Roth IRA, to where once you put that money in there, doesn't matter what taxes do, doesn't matter what the IRS decides to do as far as taxation goes, that this money is yours tax-free. It can grow as long as we stay within IRS parameters and structure the contract correctly, it can grow tax-free. And I can't, in the length of time that we have for this video, I can't express how impactful that is. But let me just share with you my personal opinion that's based off of a lot of the books that I've read and the economic studies that have been done. Taxes are going up, plain and simple. Taxes are going up. And so if in your financial vehicles and your investment accounts and retirement accounts, if you're not planning for increased taxes, if you're deferring 100% of the taxes on your nest egg, you're going to find yourself in trouble come retirement time. Because not only are taxes likely to go up, but oftentimes in retirement, you're actually in a higher tax bracket because you don't have some of the deductions and credits that you typically had during your working years. So utilizing life insurance for tax-free growth is something that's super important. The fourth and final thing that we'll talk about on this video is this. I touched on this a little bit earlier, but it's wealth transfer. So transferring wealth, going back to that scenario where you're maybe a grandma and grandpa, you've got $50,000 you want to leave to your kids. If you just leave that to them in cash, then that's going to impact their taxable income. And so are they actually going to get $50,000? No, they're going to get $50,000 minus whatever their effective tax rate is at the time. Same thing can go with retirement accounts and things of the sort. So when it comes to transferring wealth, I'm always baffled when I hear this idea, and a lot of people perpetuate this who are supposed financial gurus, to where they talk about how you get to a point in life where you no longer need life insurance. And that just like, it doesn't compute. Like, I understand where they're coming from, but knowing what I know about how the tax codes work and how these financial vehicles work, there's never a time where you don't need life insurance. I don't care if you've got 10 million bucks in the bank. When it comes to wealth transfer, there is no more efficient vehicle to transfer wealth from generation to generation. It's interesting for a lot of high net worth individuals, if they've got an advisor on their team who actually knows what they're doing, they will actually purchase a life insurance contract that's going to more than pay for the estate taxes, that's going to pay for the inheritance taxes, that's going to pay for the income taxes, so that way the heirs, or the people who the wealth is going to be transferred to, the kids or whoever that may be, that they're not going to get a huge tax bill when mom and dad pass away. That if you structure it correctly, that these life insurance contracts go from generation to generation tax-free. And there's some situations where that life insurance for high net worth individuals may need to be structured inside a trust to make sure that happens. But for most people, the average everyday person, you don't have to necessarily go through all the work of having your life insurance held within a trust. Not that I'm discouraging people from getting trusts by any means, but just by having life insurance policy, that's going to transfer wealth as efficiently as possible. So these are the 4 things that we need to make sure that we cover. First and foremost, your final expenses. You don't want a GoFundMe plan. Second, replacement of income. So anyone who may be relying upon your income, we need to make sure that we're planning for that, to replace that income, so that if you pass away and a spouse is left, that they're not going to have to be forced into marrying the first person who comes along just to have their needs met, or that they're going to have to go to work in 2 or 3 jobs to make ends meet. The third thing is tax-free growth. When we structure these life insurance contracts correctly, the money inside them grows tax-free, and if you take it out correctly, then you pull that money out tax-free as well. The fourth thing is transference of wealth. So life insurance is the most efficient and effective form of transferring wealth from generation to generation. So I hope this is going to be helpful. Stay tuned for our next video, where we're going to be going into the details of some of the different life insurance products. Thanks for watching. Hope it's been helpful. We'll see you next time.